Welcome to TradeTheMBI.com. This is John. This report is for the 18th, and we saw a little bit of a fade the other day. Again, everything's fluctuating right around this ABM green here, the 29.75. Above, obviously, you can be long. Below, you got to be short. But even this little pump, not looking that great, because the reality is we would expect the orange here to break all the way below. The reality is it's still caught between the sign and that, which is still more bearish than bullish. So you can ride with it as it climbs above, but from an overall standpoint, a little higher up is going to be worthwhile to attack, particularly when the steel moves below cyan. So that's a little ways away, so it hasn't occurred yet. So we can see a little bit of a bounce back up in here. With the midterm buyers lifting things. Still really bad, though, as far as strength-wise, having the DSC red this far under the negative 13.5 indicates pure weakness. And you can see the NQ much better, well above the green ABM in this particular case. I'll put those values up right there so you can see it. And that's why it reset with that crossover buy signal in standard form. And the Dow poised to be a little bit better. Nice pop coming up through there with the green, but again, at least in this case, the orange is closest to breaking below, which would be the most straight of longs. But you got a double whammy here with the short-term buyers jumping in at the same time, mid-term buyers seeing opportunity for discount, which is always relative, isn't it? Euro making a little bit of a comeback here off the extreme oversold. And, there's just a lot of paranoia out there about both in the EU as well as in the US situation. And like I said, we're going to start to see some solidification once the market is fairly comfortable where things are. Now that they've cut the link for WikiLeaks, who knows? I think the market may feel better about that. I'm certain that there are people in the government who are going to be happier with it. We'll see if it stops anything, but the debate coming up also, so that's the final one. That should be the final element, and that will give the pollsters justification to make any maneuvers necessary to finalize where their end trends need to be, since they do have to actually get accurate at some point to make sure that they're justifiable to their clientele. So you can see the TLT, again, nothing, and keep showing the chart, but it's like, what a waste. But it's important to know because we have to see where treasuries are going in order to get a broader view of the market, along with oil, which has had a nice run. Sustainability on it, though, that's questionable, whether there's going to be any form of increase in economic growth is the only thing that's going to change the supply issue on that. And gold with no pressures for inflation, in fact, just the opposite, not going to go anywhere. And you can see that DOC with the I'll put that back up there because you have the shakeout continuing the massive decline. You had the extreme histogram just moving barely above the red line. It could dip back down below here in just a moment and continue to cascade lower on that DOC. And here it is from a case standpoint. We had the brief little intermission breakdown. We had a brief little pop right underneath here and finally turned around above the long algo. That was around 24, so it didn't do much during that time. We had a secondary dip right there at a higher level, and then we just had one that took place at the exact same time on this breakout. I think the 5K was a little cleaner from that standpoint. We ended up with the breakdown here. We had the shakeout rising, and we were not overbought at that particular point. Likewise, secondary situation developed right here before the turnaround actually started. So the first signal came in at 20.75, second one 21.75, and here we are at 30. So all in all, pretty clean, pretty straightforward. Again, I think it's just more or less a little bit of a hold until we get the debate finalized, and then the market knows where it's going, and theoretically it should be headed higher because that's typically the historical norm. And nothing's changed as far as expectations. So as long as that remains the same, we're pretty much just on a trajectory to higher move, getting closer. We hit my 2150, so the question now is when we get to the 23, which was the secondary level. So that's could take a little while, but we have time. As always, though, continue to look for me on the Skype chat. Trade well. We'll talk to you later.